Hello and welcome to our episode of FinTech Focus TV with me, Toby. Today, I am absolutely very excited to introduce you to Christian from Valantic FSA. Christian, how are you?
Thank you so much, Toby, and I'm glad to be here and you have me. Thank you.
No, not a problem at all. So listen, I go back with Valantic for some time now. It's been a new period for you. You've moved into the business recently, settling in very well. You move in at a time where I think the payments world is going through one of the biggest changes we've seen for a long time. And you guys are right at the forefront of it. So we've got lots to go into. We've got lots to get through today. I'm very excited about the conversation. Before we do that, Christian, can you give us a bit of a background about yourself and then the company as well, please?
Sure, I'm happy to do so. So I joined kind of the industry early 90s. So I'm a bit longer out in the industry. I have done lots of different things in medical industry, public sector, manufacturing, and IT. But predominantly in the IT in the last 5-6 years, focusing on core banking, mostly payments. And yeah, payments is a very niche world from the industry point of view, but a super interesting one. And I'm very happy joining after 4 years, Finastra, joining Valantic FSA, Valantic FSA, and having a great products and a great team to lead here.
Absolutely. And tell me a little bit, for those who haven't seen it or indeed heard of too much of Valantic FSA, tell us a little bit about the business and what you guys are doing right now.
So Valantic FSA, the abbreviation FSA is for Financial Services Automation. And what we do is predominantly taking messages from one side of the world according to certain rules, manufacturing them and then putting them to the other side of the world. In the payments world, we receive a payment from any initiation channel according to the rules, whatever it is. It is a SEPA, it's an instant, it's a SEPA DD, it's a SWIFT, it's a target to RT1 message. It goes according to the rules after anti-money laundering, after sanction screening, after FX controlling, after all the processes, we put them into the right network, as I said, SWIFT, Target 2, or any correspondent bank network, or enter any interbank network, what have you. But this portion of messaging, that's our core business. And the other core business is investigation. If you have mostly in the cross-border area, when somewhere in the chain of forwarding a payment, it gets stopped for whatever reason, there's a lot of investigation around it. And we have built a tool which helps and integrates most effective with all the different kind of systems in order to collect all the reasons and all the information around the stop and how to get it going again. This is our second part with FinCase.
I think it's an amazing company, isn't it? Because yeah, certainly here in the UK, I know it's originally a German business, right? But in the UK, it's one of those sort of less known businesses, but it's got an enormous scale and growing rapidly and such an exciting journey ahead for it as well, right?
Yeah, here that's why I am on the spot here, because the growth is something where we need to put some fuel into the engine. Company is about 20 years around. The solutions are about 20 years around. And we are, as you said, a German-founded company, whereas the headquarters is in Frankfurt and Magdeburg. We have offices in Prague, in Luxembourg, in Spain, Madrid. UK might be one of the next for the payments business. We have for our trading business an office in the UK. But yeah, we are around, we are growing, but only more growth is better than the current growth.
Absolutely, I'll take that. And we mentioned at the start of the show that we were talking about this inflection point, this fascinating time for payments and the payment sector at the moment. It feels like a period of change across all sorts of life, actually, in general, but particularly in technology. You mentioned your background in technology. We're seeing this sort of collision of AI and stablecoin and everything else in between it. This sort of this glorious sort of period of opportunity that I feel within the space. But payment seems to be really addressing that. I was at a big conference the other day and saw this sort of innovation and vibrancy from the sector, and that's a really exciting position to be in. Tell me what you're seeing right now in payments, and also a little bit about what's driving that change.
So I think if you look at the banking business as such, predominantly payment, innovation only comes from regulation. I'll give you an
Very true.
example. In Europe, the ISO 20022 regulation was introduced 20 years into the market ago. Now it's become mandatory. So very slow motion. If you look at instant payment, I think the instant regulation was somewhere 2010 or 2011 out. Now it becomes mandatory. And now, once the ball starts rolling, one happens after the other. So we have now SEPA CT is kind of replaced by SEPA Instant. The next step would be, how can we tackle SEPA DD with maybe a request to pay, maybe other regulation to develop. And if you compare that to the non-regulated business in the US, half of the paycheck in the US are still delivered on paper checks. So this is the word innovation.
It's got better. I had that for many years in my US business, and we're now starting to see more transfers. But it is incredible, isn't it, about the paper?
Still,
even actually in restaurants and bars and everything you're doing, there's a lot of paper that's still involved, right?
So unbelievable. And if you tell that some people in Africa or in Asia, they even don't know what it is, a check. Yeah? They can't imagine. So having said this one, set aside. So currently, the payment infrastructure goes away from legacy, needs to become instant. That has a couple of technology implications. So you need to be 24/7 reachable. You need to be 24/7 sendable. With legacy system, they'll go to sleep overnight to digest the daily work that doesn't happen anymore. All kind of stand-in or shadow balancing are interim bridges, but they can't really support high volume payments. That's too unsecure. So that's the next wave of technology. But if you change technology, you all of a sudden have loads of new processes, and you can adapt your process. You have more straight-through processes. You have with instant, there is no manual intervention. You cannot have somebody sitting and checking if some messages are correct. You have only 10 seconds, and the machines are busy in that 10 seconds to get a payment structured, get it out, get the acknowledgement back. So that's the current challenge. And you mentioned stable coins, digital assets, etc. It's the one thing on the horizon, which many banks say they don't want to have it come along because it will impact their current business. It will drive change. Today, stable coins make about 300 something billion on payments, which is a fraction of the globe, but it's already there. And we know if something,
it's only going in one direction, isn't it?
Yeah, exactly. And if something reaches 3%, then it has a real impact, because then things are changing dramatically. And banks don't have an infrastructure today how to handle stable coins. And if I look into the cross-border payment world, where you have the slow motion SWIFT processes or Target 2 process, where money is away for a week traveling through banks, with a stable coin, it happens in 10 seconds or less.
Yeah.
If you have currency exchange risks between yuan and US dollar, euro, British pound in those days, it's pretty risky. If money travels for a week and all of a sudden the Iran war is going worse, and then you have changes in the FX rates. With stable coins, you don't. You travel in one currency. So there are some use cases which are really attractive. And if I look into some treasurer, they say, I can manage my money instant. I don't send it away for a week, whereas locked money for a week, which cannot work. With a stablecoin, the FX transaction is happening in 10 seconds. So at lunchtime, I know I have my $1 million, and 10 seconds later, I don't have it anymore, but I know it's at the other side. So I can work to the last second, and don't need to have any correspondent time lag in between. So that's a couple of things which are coming.
I mean,
We don't have all the answers yet in details. They're coming.
absolutely, and sorry to jump in because I think there's a lot to unpack there, and a big part of it you mentioned there about regulation drives innovation, in which I love as a sort of headline within this sort of space. But I think there's innovation with technology that's happening in various different sectors at pace, and I think sometimes we can look from the financial services sector, look over the fence at that and get jealous about what can happen and how people are embracing various different things and trying and failing and doing all that sort of thing. It's always harder within the financial services and the banking remit, right? And there's challenges that come to that. So, when you think about the practicalities of change within the payment space, and look at why it's harder than many banks may expect at the moment, what sort of things does that look like for you in practicality?
I mean, why is change so difficult for banks? The one thing
Yeah,
is
yeah,
because to change your heart or your lungs is something you don't decide on a Sunday morning because the sun is not shining today. Let's go for a surgery for my heart. So that is one part. Yeah, it's really your life engine. If it stops, the whole bank stops. And payments, as long as they are working, nobody cares about. But only when it stops working, then you have a load of problem.
yeah,
So resilience of the processes, having systems in place which are 20, 30 years old.
yeah,
Nobody really knows what happens else when you turn it off. Where is a wire which has been established 10 years ago, not documented? This is really something people are really careful about, and there is good reasons, because we have seen failures where you have not been thinking through, not being very cautious about these kind of changes. So I understand why the changes are complex. The other thing, these changes are very costly.
yeah,
And this makes for a board member in a bank said, have a mandate for 5 years. Why should I invest in a multi-billion million project which lasts 10 years I cannot
yeah.
benefit from? So leave it as
Your legacy's gone well after you've left.
yeah.
Exactly the point. Yeah,
So there are a couple of things. And the other thing is there are so many new things popping up. Now, if I look at the fintech world, and if you go from one fintech fair to the next,
hmm,
there's 100 fintechs popping up, and in the next fair, only 10% of those fintechs still exist, but
yeah,
therefore 120 new ones rising. So
yeah,
the evolution, the re how shall I say it? They are born too fast in order to really become a reliable partner.
yeah,
And here, like Valantic, we are more than 20 years in the market. So we have a history, we have a robustness, we have a brand where people can rely on. And this makes some of the conversations well when people say, oh, you're not a fintech. So we are a fintech, but we are not a new one. We are in the
yeah,
market since 20 years. Yeah. And that makes the conversation easier. And we have references, we have reference cases, we have technology which is proven, and we have a team of specialists who really know what they're talking about. And I'm new, as you said. I'm settling since the beginning of January. And when I talk to the first customers with my team, the feedback I always got is, you have the right experts. Here we can
yeah.
talk. Here we get information. Here we enrich our horizon, and that makes our decision life easier. So Lots of things.
I think that's so important, isn't it? Because people forget when they're dealing with, they get frustrated about innovative startups and how long procurement takes and everything like that. But there's an awful lot of significance around the stickability, the value, the experience within in all of it all. And I think what's very noticeable to me about Valantic FSA is, whilst it's a 20-year-old business, it remains at its core very innovative, and continues to evolve and develop and move at pace, so it can bring the best of both worlds, the old and the new together, and that security plus that innovation. And I think that's probably something that attracted you to the business. When you were talking at the back end of last year, the start of this one, it's a really exciting position to be in, right?
Yeah, it is. It is good, and there, of course, we have also our challenges. So this is not we're not walk in the park. Also, we have to cope with the technology change. We have to cope with AI. We got a lot of requests. What do we do with AI? How can we exploit the new opportunities? And as in a business being stable like this, you need to be very careful where you let technology make decisions. But we have a couple of very good use cases we explore. We have some use cases, minimal viable products out there. We just last week we had a 1-day workshop where we're testing on real environments. So this is for us a new challenge, and becoming more and more a straight product company, less doing all the sorts of customizations, but taking care that there's a real standard product out there. That's our challenges.
Absolutely. And you mentioned challenges there, that there's a lot of pressure on your customers at the same sort of time. There's a lot of competition out there in the marketplace at the moment at the same time too. With banks being pushed and challenged by the regulation alongside that as well, there's a lot of expectations that sort of come onto those guys to continue to evolve, to continue to do it. How are you supporting them in that sort of challenge as it becomes a very different market in the industry as well, with that payment space?
Yeah, the first thing is, I think the banks have realized very, very late that there is a competition out there. They are used to their traditional competition. Like one large global bank says, yeah, there's another large global bank.
We know what we're dealing with.
Yeah, we know whom we're dealing with. They are both giants. And then there are these small fintechs which has a straight idea. They capture market, they're involving it, they focus on a specific niche, and all of a sudden they became a real competition in a certain market space, and the large banks did not realize that the last 10 years. Give you an example, cross-border payment is probably one of the most significant profit generators in a bank if they do cross-border payments. But they don't realize that the Revoluts, the rise of this world, not just taking a little bit of their market, but they taking significant portions. And all of a sudden, Revolut became a bank. It's not just banking as a service provider, but they became a real bank. Now they offer, even for SMEs, so small and medium business, they offer full account activities and support for their financials. So there is change, and what we try to help is this change from legacy to new technology. There's a lot of work, there's a lot of trust and expertise needed, and we can help banks to make that step more relaxed. Let's put it that way. It's still a hassle, but we can prove that we have done it, we have successfully done it, and we have references out there. They will prove the concept we're using.
Yeah, it's a really interesting thing you say that. Plus, I think that there's changing consumer expectations from, and I speak about this all the time. When you look at your phone, you've got an expectation that things happen instantaneously, and there's a frictionless process in everything that we're doing on our day-to-day lives right now. The banking world has obviously been a different sort of space. There's a thumbs up that's immediately come up for some reason, just agreeing with me. Appreciate that update. But we're also seeing expectations change from consumer, and banks having to think about what a good payments process looks like. And I know that's again something which you're looking at in depth. Tell us a little bit about what that looks like to you.
I think it's the most easy part to describe what does a good payment process look like. You don't realize it.
Yeah.
You don't have to deal with it. You don't
That's
realize
a
it's
simple
the wrong
line,
word.
isn't it?
No, it's don't realize it. It's the wrong word. You realize that it's not a burden at all.
Easy. Yeah.
Seamless and easy. For me, and this is where I really get stuck sometimes when you try to buy something online or in a shop out there, and all of a sudden, as you said, with the mobile, the tap and pay does not work, or the instant, yeah. I mean, we have now the regulation instant payments within the SEPA region, 10 seconds. And I'm challenging, I have a couple of accounts at different banks just to know what's out there in the market. And instant payment takes 10, 15, 20 minutes. That's not instant. That's much faster than before, but far not instant. If you look what a credit card can do currently, and that is still the competition to the standard SEPA instant. And if I am a bank, or if I'm the regulator, and one of my aims, the political aims, is to provide an alternative to the card networks, to the US-based giants card networks, we want to establish a European payment infrastructure which can handle all instant in order to make online payment, transaction in a shop, etc., reliable. We need to keep the 10 seconds. We need even to shorten the 10 seconds to less than 5. And if 10 seconds today is the challenge, if you ask them to do 5, they will lose the hair. I have done that journey from overnight processing to instant. So we're
that's what's to blame. That's what's to blame.
Yeah. But this is the challenge. Our bank's IT infrastructure is still mainframe based, is still outage based. It's still in processing Windows. In the normal world, it doesn't exist. And look into there's another industry I'm always looking and referring. That's the telco industry.
Yeah,
they have had exactly the same infrastructure legacy 25, 30 years ago. Then when the fixed telephone moved into mobile phones, they had a rush to change. Otherwise, they would disappear from the market.
Yeah.
And telephone is also very regulated, is very strict, but the competition was extremely high. And the product is rather simple compared to a banking product. But nevertheless, they changed the whole infrastructure within, I wouldn't say months, but it was single-digit years and developed. And the banks are light years away from that change. And if you look at the new banks, which are really coming onto a new infrastructure, new product development, they have a new bank architecture where the whole banking organization is totally different. They are outperforming every traditional bank. The only thing is they don't have the liquidity, they don't have the market reach. Otherwise, the legacy banks would be shaken up.
Well, this is a really interesting thing for me because you've spoken beforehand about the fintech space and its pace of innovation and winners and losers in that race. You've spoken then about the sort of newer banks, coming through, and with the recent news about Revolut, that sort of comes into that sort of thing. It's a different, changing world, and I think what's really interesting for me about banks and the competition of where it comes from is, a short while ago we saw. I say a short while, 15, 20 years ago, when I first started working in this sort of, specifically in this sort of space, it was banks and fintechs coming together, and fintechs being the challenger to the banks. And what the banks did very well was then adopt that world, and sort of, they built their innovation labs, and they embraced technology, and they embraced fintech and started to own the fintechs within it. And then the next sort of pop up of that was the digital asset space, and we've seen this TradFi and DeFi world merge again. And actually now, when you're looking at this sort of thing, there is genuine sort of pressure in my mind. And are we seeing the second rise of the fintech against the bank, or is it again another place where we'll see, because of those challenges which you mentioned there about the sort of size and scale and liquidity, et cetera, is this fintech's second rising against the banking industry, or what are we actually seeing at the moment?
I have a bit different view on it. Because the fintechs have a huge innovation drive, banks didn't buy the product, they did buy the entire company.
Yeah.
And then swallowed the fintech into mama's arms. So
yeah, absolutely.
the fintech became all of a sudden the same pace like the bank.
Yeah.
And stopped.
Yeah.
You see it with core banking provider which have been acquired by banks, or where banks have a major stake in it. The one thing, competitive banks will not buy from this fintech anymore, and the fintech has now to run in the pace the major investor is asking for. So that makes the fintech not only survive but prosper and grow, but not at the pace of regular fintech. And now the second wave of innovation comes, and they even overtop it. So we will see what's going to happen. But the fintechs 15, 20 years ago, they were jumping on the traditional banking processes, payments, core banking, lending. Many did on the front end, multi-channel, these kind of things, or sanction screening and this. Now, with AI, the whole sanction screening gets a new wave. And if you do today anti-money laundering without the capabilities of language learning and AI, the product will not succeed compared to any of the market because the capabilities are on top. And those are now getting in front of everybody because they grow fast, because they have product to offer which is not in the legacy. And the next thing will happen with everything which is tokenized in one shape or format, and which will involve wallets, because this is not the traditional banking. So there's not a replacement in the bank. They need to embrace something. And I can tell you my challenge today is we are a banking hub provider. So a payment hub provider. We are a payment engine, and we are used to put money into networks, SWIFT, SEPA, what have you.
Of course.
With stablecoins, they run their own networks. They have a bank-to-bank network or a bank-to-consumer network. They have their own platforms where they trade. This is not a network anymore. It's a platform because of the internet capabilities. And that will be for banks, and hence for us a challenge how to incorporate that into a core banking process. Because if you and me want to pay in any tokenized thing or any program money, we want to go to our bank. I don't want to program my money myself. If I am a bakery, I might want to buy something with stable coins where I wouldn't have a contract with a farmer to deliver flour or something else on a contract-based money. But I don't want to program. I don't want to do all these kind of things. I just want to have it executed this way. So the bank will become back an advisor to that medium-sized or even larger size companies in order to orchestrate these kind of new capabilities of money flow. But how to incorporate that in a payment process, which is not in the standard network, that is the challenge for us, where we have to offer new ways of processing these kind of things, where we still experiment. There is no standard out there. So that will be a challenge for the fintech world to make here some conclusions and some best practices.
The fintech world loves best practice and loves challenges. So it's got a long track record of
Yeah.
that, and I know, and I'm sure you guys will be in there. But I think you're right that the stablecoin conversation, the tokenized conversation, is something which is very real now. And as we said beforehand, it's only going in one direction, and something there to take on board. So you're seeing an industry, a banking industry, which needs to adapt, which needs to build, which needs to grow. So if you're sat there and you're a bank today, and you're looking at the sort of capabilities that they need with everything that we've spoken about so far, and you're talking about non-negotiables about what that looks like. Tell me a little bit about what you're advising at this sort of stage.
I mean, I'm not there to advise a bank. They know what they do. I can offer my view on the future demands, and my view on the future demand is be more focused on the digital infrastructure and getting it instant ready. That is one part. The second part is change your business process to become an advisor as a bank,
Yeah,
especially in the digital asset world. Don't be an operator of an account anymore. You need really to advise people. And if you look at a retail bank versus a corporate bank or a wealth management bank, there's a total different customer experience. And especially if I take to corporate banks or so on the edge between corporate banks and retail banks, where you have these mid-sized companies in between, they will need really a lot of advisory and a lot of financial expertise in order to exploit the capabilities. And only those banks slash fintechs who can grab that piece of advice and making money out of it, they will be ahead of the market in the future.
yeah, it's that sort of ahead of the market, I think, is a great opportunity at the moment, but it's also a great threat. And I think there's often a complacency around it and an underestimation of challenges, particularly around regulation, isn't there? We see people sort of almost wait till the last minute to act on things and realise the scale of the product.
There's sorry to interrupt. There's always the hope. They will postpone it. Which
Exactly.
happened. I mean, this
It
is
works
with
sometimes.
kids. Yeah, and nowadays with kids, yeah. When I have two daughters, almost they are adult, but when you try to make a regulation with them, and then you weaken the regulation, they will next time just test you out. You're gonna postpone it again. And the ECB was postponing the whole instant thing, the whole ISO thing. Everything was postponed till all the deadlines were so tight that they couldn't
Yeah.
postpone one anymore because they would change the whole infrastructure in any other side. So this is where we are right now.
Parenting and regulations put in the same sort of thing.
Yeah.
And is that where you think the challenge comes from? That banks underestimate this challenge because of that sort of almost false dawn that sort of quite often happens when change happens in an environment.
I can give you trillions of real examples. When I was in 3 years ago, I made a roadshow with basically in every country. We try to engage with the local banking association to give a workshop to banks. What needs to be done 2 years before the instant regulation became power. And 80% of the question was, are you sure it will come that day? What is the chance that it gets postponed and by how much? It's not a question if, it's how much.
Yeah, exactly.
There will be no change because it's too tight with everything else. They will not postpone it. Come on, we have seen so many initiatives which have been postponed, especially in the UK with faster payments. That got postponed to the NPA, the new payment architecture, till it was so unrealistic that NPA died. And now it's faster payment goes NPA the second time. And the ECB had the same thing, and now they enforced instant payment, and now everybody is shaking up. And we see that some infrastructures are reachable, but not robust enough for the growth of the transactions, and I have already banks reporting to me that unexpectedly the instant portion is growing 30-40%
Yeah.
per month.
Yeah, that's incredible. That's incredible, isn't it?
Yeah. So, and if you
We're seeing that when you
take,
look at that over a course of time, and that's an exponential line, isn't it?
yeah, and of course it will flatten, yeah. But this
Yeah.
is a peak, and if your infrastructure in the bank is not sustaining that delivery, the demand of delivery, yeah, you get stuck. And
Yeah.
give me a bank who can have an outage of payments for half a day. Yeah, I don't want
That's
to be in
it.
the
So,
newspapers.
Christian, I've loved this conversation. It could go on for a long time. So I'm going to finish with a couple of final thoughts. If we look at the next sort of 3 to 5 years, which is a difficult thing to do with everything that's changing as rapidly as it does, and we're thinking about the winners and the losers or the laggards, shall we say, in the payment space, the modern payments capability space. What do you think will be that separating point? What will be the things there that sort of do separate the good from the bad?
I think the 3 to 5 years is not that difficult to predict. So there is one thing: the evolution of instant. We have now
Love that.
SEPA instant replacing the kind of on the way replacing the credit transfer. So that needs to become more stable. That will evolve into a European-wide EU, let's say EU-wide scheme, because the non-Euro EU countries will need to comply with the SEPA regulation in the next 2 years.
Yeah.
So that's a huge expansion. And then the network, I mean, there is coming another 100 odd million on people putting their payments in the same system. No? So there's a bit of a shaking into. The thing is that many banks have still kind of bridges. They have not a native instant infrastructure. That's the next wave. In my opinion, SEPA DD will be replaced. So direct debit will be replaced by something like request to pay or something else. So I cannot believe that the EZB will leave that legacy payment into the market. They will want the industry to use something. So that's the next thing. The next big thing is like verification of PE, DORA, resilience. That is a part. And everything, now we have MiCA in place. So stablecoins become a reliable, a regulated part of the payment. That is going to come. And 2029, the ECB wants to have the first prototypes of the digital euro out there. We see in Germany right now, and I think in France, we see the first infrastructure for the wholesale CDBC, so the pure digital part, not the offline part, and it picks up. And I'm pretty sure the digital euro will pick up as well.
Superb. And let's finish with a final sort of prediction or a piece of advice, shall we say? And I know you're saying that you're not here to advise, but if you're sat there and you could prioritize one investment area for a bank and their payments business today, what would that area be?
Unfortunately, there is not a single trick pony. Unfortunately, you will not. This is not. You cannot do only one and leave out the others.
Yeah.
Because if you want to go into the digital world, you need to have an instant infrastructure. If you only invest into an instant infrastructure, you're behind with your products. So you need to have both. And you need to every bank needs to get rid of their legacy payment systems. And we see it out in the market. The mid-sized retail banks are really seeing how they're shaking the trees, and it costs them really high money to maintain that old stuff. And if they compare the cost effectiveness and the efficiency and the new way to market, the return of investment pays off.
Yeah, I love that. And I've loved this conversation, Christian. It's been an absolute pleasure having you on the show. I feel like this is well, actually, we've probably gone over time a little bit, but a 40-minute show that could possibly be 4 hours if we were going and riffing properly on all of this. so I'm hoping you'll come back in the future and we can have you back on it. But this has been an utter pleasure. If people want to find out a little bit more about Valantic FSA, get in touch with yourself, having heard this, what's the best way for them to do that?
Either send me an email, give me a phone call, find me on LinkedIn. I'm reachable on all different channels.
On all of the above.
I'm happy to be involved. Yes, all of the above, and happy to respond. Invite me to any exchange. I'm happy to share my mind. And thanks for having me, Toby. Today.
Listen, it's an absolute pleasure. Really good to get to know you, to find out a little bit more about the story, and to hear your thoughts and insights in an area that I think is evolving at real pace. So, Christian, thank you for coming on the show, and thank you all for watching. We will see you very soon on the next episode of FinTech Focus TV. Thanks a lot.